What's up, everybody? Mr. Theta Bucks. Mr. Theta Bucks put the question right off the bat here. How do you generally sell? Very good. Very good. I'm not sure how to answer that. Let me think about that for a little bit, Mr. Theta Bucks. Dennis, we miss Dennis. Thank you for wishing us a fun afternoon here, Dennis. I guess fun morning for people over on East Coast there. Chat, let me know in the chat if you have any issues here. If you have any volume related issues, we should be good. It might be some background noise. My wife is at a painting class by the sea today, so I am at a cafe that overlooks the sea. Chat, give us a holler if you want to see the sea. I know last week we did. Hey, have you ever seen a DMZ? We'll do the C part if you're interested in the C part. Not close to the DMZ. Not close. That's good. Don't want to disrupt your painting class. Shibo, good to see you, man. The recording will be up later. Agent JB1, what's up, man? Study time, office hours. Time for questions, right? We've been doing the study. We've been doing the hard work. Can't wait for the beep boops to beep boop boop the stock price on Monday again. They will beep boop boop it. I think they're gonna beep boop boop it a little bit. Like I said, we'll revisit what we're gonna do today. It was a good time, I guess. I got the agenda scrolling right there. I got the scroll thing again. I like the scroll, the ticker tape. It's very fun. Yeah, we are gonna check in and see how this Rainbow Road thesis that I laid out for you guys last week, and then kind of expanded in this written form by then going on and actually looking at some of the swap data, not just right. We kind of have these two things, right? So I consider the actual swap data and the 53-week theory actually to be different. Very interesting if they line up, but it does seem to be 53-week theory. I would say is a good way to sort of put a pin on stuff that's not visible. So swaps that might be hidden. Again, we do have data for swaps that are visible, and it does look like those visible swaps did matter at the same time. That 53-week theory also mattered here. So one of those two things mattered. It's hard to say which one, but nonetheless, that did end up proving to be a very potent tool for this week for going ahead and anticipating a low. So as long as we don't just cowabunga straight down on Monday or Tuesday, I think this was an effective application of those theories and that data. We'll come back to that in a bit. Let's see. For Keira Knightley votes, we got to take time for the Keira Knightley votes. Wolf of Wall Street, Atonement, both great Margot Robbie and Keira Knightley appearances, respectively. Star Wars and The Big Short from Agent JB1, also good ones. Yeah, a little 1999, The Phantom Menace, Keira Knightley action. Very good. Very hard to not like Keira Knightley's Pirates of the Caribbean. My wife's personal favorite is 2005 Pride and Prejudice. That's her favorite one. It was a major theming inspiration for our wedding. So obviously, if we had her here right now, that's what would be an obvious first place. But personally, I am quite partial to Keira Knightley and Pirates of the Caribbean. The first one, 2003, which I think is a quiet masterpiece. I'm starting to use the AI language now, guys. Save me. I really have to not. You hate it, and then you start to use it ironically, and then it starts to appear in your head as the thing to say, and I dislike that. Right? The one thing I did successfully resist vibes I'm pretty happy about that in my life. That I really like. I understand it. I'm not gonna shit on somebody if they say the word vibes. But I didn't want that to become like the every third word that I say. Like for some people it is. So very happy to have resisted that. Trying to do that with quietly. I don't want the AI conditioning my vocabulary too much. But that would be my choice. Z-Bone. By the way, Z-Bone, I don't know if we've been introduced on live before, so it's great to have you. Great contribution to the chat here from Z-Bone. I'm always doing my side quests, man. Dude, you gotta do the side quests. You gotta do the side quests. We're here for painting class. We're here for painting class in Paphos. Paphos, really cool. The Apostle Paul was here. The Apostle Paul was chained to a column and flogged here by the Roman governor Aemilius, who was so impressed with his ability to resist suffering that St. Paul did indeed convert him to the way of Jesus Christ, which is really great. So that's right here at Paphos. We've also got the Tomb of the Kings, lots of tombs here, some Roman villas, very well preserved. So pretty cool place, let's say. Z-Bone and Guido Suave look like you guys are ready to see some of the sea. So I will rotate the camera here. Let's see how I figure out this. Just going to move this forward for a second. We'll see the short. I'll do a little rotation. There you go. There's the Eastern Mediterranean Sea for you guys. Let's set up here. So a little bit different than the DMZ. I guess Egypt is that. Yeah, a little bit too far to see Egypt, but it is that. And I guess facing this way is back towards the Anatolia. Matt Hathaway, welcome to the party, my friend. Thank you very much. Happy Saturday to you. Hope you're enjoying your Saturday so far. What's up, Tom? Tom is in the house. Mr. Skins. It's okay, man. Welcome to the party. Oh, Kurt's here. What's up, dude? Down in New Orleans. Welcome, sir. Short Fridays here on a Saturday. Always welcome. Yeah. So I understand, Guido, why you might not necessarily have known that Sabe, decoy for Padme, was played by Keira Knightley, and if I'm not mistaken, it is because she may have had I think she was uncredited. I will not send us into a court of action that will lead us to war. Yeah. Let's take a look at some of these questions here. So Mr. Thetabucks has a question to start us off. How do you generally sell calls when at a time like now when we're approaching earnings but the price is low? Aim for call wall still, but just 1 or 2 weeks. So this is a really good question, and it does lead into our discussion of how, a discussion of what's to be anticipated, let's say, with our price action. So a major question that I always ask when it comes time to positioning my coverage is, right, I take a different time horizon depending on what I think is going to happen in terms of our price action. So if I think we're immediately heading into a high volatility area, or we're at sufficient risk for moving into a high volatility area in this period of time, what I'm going to do is target weeklies. Weeklies, maybe 2 weeks if I'm feeling a little bit more risky. I will do something like a call wall target whole dollar, $5 strikes, doing something like targeting 25 is generally something I've done in the past. If we're in that upper bracket, right, I'll migrate that stuff to 30. I'll try to stay aware of what's going on, how close we are to an OPEX. I think if we're on the nearer side, something like, let's say we're just after April OPEX and I'm thinking about May OPEX, I'm probably going to go weeklies. If we're 2 weeks out from May OPEX, and I think we might still anticipate some more volatility on the other side of that, maybe I'll go ahead and I'll target OPEX proper. Right now, what did I do? I guess what I did going into the end of the week, right, is so this is something I planned, and this is something that I talked to you guys about last week, right? So we can pull up our chart here. Right, my anticipation is that we are going to see swaps this week. And I think we indeed saw swaps this week. I talked to you guys last weekend about certainly about 53-week theory, which was certainly important here. Let me see if I can make this a little bit bigger. Let's put down to daily. So, I have our 53-week line here. I pointed this out, right? We had a low here. You did notice that we ended up closing below our 53-week line. We do have a little bump up to about 24.50 max going into next week. And then, immediately the week after, we're looking at 21.50. So that's our 53-week line. I want to take this over to our daily chart because I think that's going to show a little bit more of what we're looking at here, right? So we had our yellow star swap right here on the 18th, right? So if you didn't have a chance to check out my article from this week, I'm gonna go ahead and keep that pinned. I want to do something throughout this cycle where I would like to keep that thesis up. I would like to keep that outline up, basically throughout the whole of our period, and then post updates, do live stream, answer questions, do little tweets that kind of relate to that, and just kind of keep a sort of live update based on what's going on with the actual stock, and then comparing that to that 3-month framework there. And so in a way, right, this is to say, hey, I want to make sure, right? I think last time that I was in this, I tried to keep a kind of going thing, but eventually it got so unwieldy that the articles, the daily stuff was getting so long, and it was a lot of people were scrolling through it and just trying to get to the options update type of thing. So this way I can bring out that stuff when I'm seeing stuff over on Twitter. If I think there's a really urgent thing I want to do here on YouTube, I can pop out I can pop out a video. Obviously we'll talk about stuff regularly on the stream. But this way that's going to be up there on my Twitter page, so you can refer to that. You can refer back to what my overall outlook is, and then you can evaluate stuff. Right? You can see my thought process, and you can see okay, this worked out, this didn't work out, this worked out, this didn't work out. Okay, what might be different, what information might be missing, something like that. But then at least you've got that as sort of an overall template to go off of. That's at least how I'm thinking about that. So, so you recall, right? So the big one for this week, was yellow star swap over here on 18th of March. So for a couple reasons, I kept the symbolism consistent over from Richard's symbol there. It should, I talked this week about, how last year we had Richard's star thesis. Obviously, we have this other question now of, was that rolled last year? It really did look like that came into play. Again, the question is, was that rolled? If that was rolled, how far out would that be rolled? Again, we kind of have 53-week swap thesis as a way, 53-week forward projection as a way to sort of keep track of that as a sort of rule of thumb. But then I was able to go back through, and this is what I did earlier this week. Basically I was a little ill on Sunday, so I didn't quite get it up on Monday in time. I think I posted it on Tuesday, but I spent a lot of time on Monday working on this. And I was going through Metro Bowen's old swap data from 2024, and I did see a mess of swaps. Came to about 10 million in notional that was set to expire right there on the 18th. Some folks that I talk to regularly about swaps also let me know that there actually are GME swaps, not necessarily the same ones as the ones identified in Metro Bowen's data. But there were swaps with about 10 million notional that was expiring on the 10th. We did move down into that. What we did not quite do is we didn't get the absolute low on the day of the swap. We did go down the following day. We had that little kick up really towards the end of the day. And then Friday went down even more. It looks like possibly in sympathy with some things going on with SPY, which we can take a look at in a little bit as well. But what this would mean now, what our next stop is that we're looking now at earnings. For some reason, TraderView still has it out here at the 31st. It's not. It's going to be right here on March 24th, like we thought last weekend. So once again, Wall Street doesn't get it. Somehow, I just happen to know what it's going to be by some magic spell. But there it is. On the 24th, we got the company announcement on Monday after hours. Is that right? Interesting time to drop it. Just about a week out. They usually give us about 10 to 14 days. But in any case, so we did get this super deep low here, very interestingly, which did dip below the 100. I want to say the 100-day moving average, and then bump back up above it. Let's see. Yes, actually, we closed right on the 100-day moving average. That's right there. That's that orange line. And so if we bump back out to our weekly, what does this say? We can put our 53-week offset back up here. And what this is projecting is we've got room all the way up to 2450. Right. What I think is going to happen, and this is why this is pertinent to my trading, what I think is going to happen is I think we've got a strong chance of a rebound on Monday and Tuesday. And I think the reason for that is I think we will indeed move down into, as you can see that I've marked on your chart, we are going to move back down strongly, and I think we will move back down to that 2150 area at a minimum. I think there's a good shot we move actually even farther below that into April OPEX. Now, going back through the old swap data, we did have stuff from April 9th. April 9th also does more or less track 53 weeks versus the low in early April last year. So I think April 2 was our true bottom. So that April 9th date does align with that. What is interesting, however, is, and I did check with some of the folks I talked to with swap data, about swap data with, I should say, and the specific swaps in Metro Balance data that were set to expire on the 9th have been terminated. So whatever those were, they're no longer open. However, with that being said, there is a different set of identifiers which is linked to what looks to be the 20th of April. So April OPEX is the 17th. These look to expire on the 20th. And we have a very large notional amount. So we have 75 million. So that's 7 times the size of the swaps that were just rolled right here. So I have very, very strong reason to think that we are going to see a low. April OPEX is going to be something like, maybe it won't be our true year-to-date low, but it's going to be a low. Any real volatility is going to have to wait until after that. Now, we might get some, right? We might get this kind of bounce back. What we've seen before, for example, in Q3 earnings of last year, what we saw, Q1 earnings last year, we saw this. We saw a move down as a result of earnings. We hit a deep low, and then for about a day, immediately that day after, or within about a week, we did see a sort of recovery before then going back down and retesting that low. So what I think is, because I think earnings is going to be a double miss, I think we will see, I think 2350 is probably our likeliest move up by Tuesday. I think there's a solid chance we see something like 24. I think 2450 is less likely at this point based on how low we got on Friday. But if we do see 2450, that is like blaring siren that they are absolutely going to dump us. That is certainly what I think. I think we could see something. Well, yeah, like Q3, but really, I think like what we saw in 2024 here. So if we bump out a little bit, back here. So I also marked this up in the article here. You'll notice that on our key dates we still stayed below that 53-week line. Interestingly, right? And we actually throughout all of Roaring Kitty's stuff, they really fought to keep us closing very, very close to that line. But you'll notice, right, that we have right here on earnings. In fact, it's probably easier to take a look at this if we go to our 1 day. So yeah, so you recall, and this is something that I pointed out during the course. I guess in my week, in that sort of weekly write up there. We can see here, right? We got this kind of small top, then we really plummeted into what looked to be a low, and so we got that low right there on OPEX, which was Friday the 22nd, right? And it was into the close, right? It was down into the close. One of those patterns that we don't see super often, but in that last hour and a half, we just kind of plummeted. Now we came back 25th Monday, and then we screamed up into earnings. So we opened slightly above, right? So we closed at around 1305, I think, something like that. We opened at 1340, and then we just tore up basically all day for about $2 into the next day, where we closed at about 1550. Earnings dropped, Q4 earnings dropped, 2-day run ended, and we opened all the way back down at 1314. So I think there is a significant likelihood that we see exactly that move. And I would not be surprised if what we saw on Monday, or on Sunday night even, I think I even said this to somebody on Twitter, on Sunday night even, that we would see something from the White House, something that's like, mission accomplished, and then all of a sudden, the markets bounce back. And if you recall, we had something similar, I think, in SPY. So we certainly did in SPY last year. So we're falling here. 2025, it's a tariff stuff. Not quite 2024. OPEX, obviously a little bit down into OPEX, stagnate, start moving down, downtrend. Yeah, so that's really when our downtrend started, 2024. Started much earlier last year, so not quite like that, let's say, for spot, but very, very similar price action with respect to GME popper. So, right, because of this, I'm back. All right, disconnected for a second. We'll bring up the old sketch pad. So, so coming back to Mr. Theta Buck's question. Right. So specifically, right, how am I approaching this particular schema that I just laid out here? Right. So I brought something like this up last week. So this is our sketch from last week. Positions now, CC's $20 covered call on a March 2026 as a 5.8. I did close those out. I closed those out as close to $3 as I could on the 19th. Okay, so I was a little bit early. I did leave some meat on the bone there. They really took that straight into March OPEX itself, which is what they did last year exactly. But I got a little bit too tied on thinking like, oh, okay, that was the bottom from the swaps. Maybe we just kind of go sideways. We got this $23 put position. Like, all right, they're probably going to want to. OMM is going to want to keep that out of the money. So we're probably going to end up maybe around 23. Oh well. So I missed out on a little bit of downside there. You never get it perfect, right? But so I did cash out of those, and then what I did do is I sold a bunch of 24s. So I sold a bunch of 24s going into the end of the week. For like 5 cents on that pop up there. Get a couple grand, whatever. Nice little bit of icing on the cake there. Let those expire. So right, I don't have a lot. No, I do have a couple that I sold. Just a few April OPEX $20 calls. I mean, just a handful on maybe only about 5% of the position. But I'm really waiting to get this bull move beginning of next week. I wanted to have a little bit of cash, right? Because I closed all those out. I used quite a bit of cash to close those out. I wanted to make sure I had a little bit going into next week in case, I don't know, something unexpected happens. But yeah, largely I'm uncovered going into that. But we'll see that. Hopefully, see that upside volatility. And then be able to enter positions like that, anticipating that we're going to dump, right? And so this was my thing. If price is greater, if price goes to this, is what I said last week, right? If price goes to 23 by March OPEX, then those are $3 for a profit of 280 per contract. Hey, that's what I did. I did exactly that. There we go. And said, okay, if price is at least $23 pre-earnings, re-enter in full on $20 calls. For April OPEX. I don't know if you guys can hear that in the background. Somebody is not very happy. Somebody wanted to push around the chair. Dad said no, so meltdown. But that's okay. Hopefully that's not too strict. So that's me thinking OPEX to OPEX because in general I still think this again coming back to Mr. Thetabuck's question here. Right, I still think that we are in a down period, that the true cycle transition is not going to be over until after April. Okay, last year, for whatever reason, swaps, the cycle transition, everything was very close together. Okay, this year that's not the case. We have this pile in March, and we have this pile out in mid-April. Smaller, equivalent notional value on the swaps here in March, only at about 10 million, with really the main pile of them. Look at least from what is visible, 75 million in notional out in out past April OPEX. So because of that, I think they're going to try, maybe they'll futz around in between here, but I don't think they're really going to push that out until let us go until after that. Now, what does that mean? I do think that means that post-April into late May period does have an opportunity to be a little bit more volatile, say, than what we saw last year, right? Less slow developing. Maybe it doesn't go as high, but I think it might be a bit quicker there. So hopefully that gives you an idea. That answers your question there, Mr. Haybucks. Good question. Very, very helpful to get us started off today. Let's take a look at Matt Hathaway's question here. I understand that the investors who are short ES swaps will want the price to be low when they expire, but how can those investors also manipulate the price to go lower on or around those dates? So that is going to be a question of how to use the extended liquidity engine. So again, I outlined this over in the article I have posted on Twitter, but it's worth recapping here. We did talk a little bit about this last weekend. But so the instrument that is used in order to adjust the price is the extended liquidity engine that runs through ETFs. So FTDs, this is the engine that allows for adjustment of the price, right? So strategic fails to deliver, right? What folks used to refer to as naked shorting. It's, sort of, except the trades do get settled. True naked shorting, you short it and you never have any intention of closing out the position. Like the seller box stuff tends to be something like true naked short. Well, even that I don't think is naked short. That is still using the FTD system. But maybe the last round to be naked because you close out. You seller box and so you don't have to close out your positions. What we did see, and this is something I pointed out in also in this article over on Twitter, but we can bring this up here over on Chart Exchange. So here. So we want this here. We also want to bring this up on State Street. I don't know what's going to show us historical data, so I have to go back to that screen that I took. Anyway, the main concept is this. When we see large numbers of shares being redeemed, created, if we see borrow fee go up in some of these ETFs, it's a pretty good indication that that institutions are in the process of using the ETF in order to suppress the price, either preparing to do so, actively doing so by churning up this synthetic liquidity in order to go ahead and be able to generate volume on one side of the trade, but then not on the other side of the trade. So let's see, take a look at XRT now. Okay, so there we go. So they did create again. What I did notice last week is I did notice that XRT had redeemed down from about 8.6 million down to about 4.8 million units. By midweek, they had created again back to about 6.8 million units. We are now back down to 4.2. So what this tells me is that synthetic liquidity has been tapped into on at least two different occasions over here with GameStop in order to go ahead and adjust the price down. That XRT has been used in this case as an engine for that, and to demonstrate that this is in fact in demand, we can go ahead and take a look at our borrow fee data. And yeah, if we take a look, we can see XRT borrow fee has just been on the rise throughout all of early March. So this has been being prepared for a while. And the fact that the borrow fee, right, so we're very close to near the top here on borrow fee. So shares of XRT right now are highly in demand. So this tells me that institutions right now are using the extended liquidity system through ETFs in order to adjust the pricing. So if you are an authorized participant, you can do this, right? You have the ability to do this. Let's say you have swaps open on a ticker. You can tap into this system. You can strategically fail to deliver units of an ETF, right? You use the ETF to create, let's say you don't want to show fails on the stock itself. So you get shares from the ETF so that you can close your FTDs on the stock. You then get fails over on the ETF, and you clear those fails by creating with some other ETF, which again you can do because of your privilege as an authorized participant. So long as you are engaged in bona fide market making activities, you have this extended timeline, which I refer to as the Brno-Mendel. Well, it's the Brno-Mendel University paper, 2023 paper on ETF extended timelines, on extended settlement allowances, but the Brno formula, which is, Richard usually refers to it by the shorthand T plus 33. The full formula truly is T plus 6 plus 35 calendar days, C35, plus if it's a an equity, it's T+1. If it's an ETF, up to T+4 for a creation. So we continue to see the evidence that the system is being used here. There's one more thing I wanted to make sure that I pointed out to you guys here in XRT, and it's that if we go over to FTDs, this is another reason why I think we may get some volatility, some upside on Monday. And it's that right here on 2-2. Is it? I guess it's not here. I guess it's on GME proper. Yeah, it's here on GME proper. And it's on GME proper, right on 2-2, we had 341,000 fails. Now, that's not a colossal amount, but that is a large amount. And it's substantial in the sense that, you know, it's going to, these will require some clearance. And the end of a window that would be involved in the clearing of these FTDs, if we go by a Breno formula, the end of that window is on Monday and Tuesday. So again, it can be really hard, right? They don't necessarily have to clear this, but I think based on the way that things have looked in the past, based on what they might be setting up here, this kind of a dunk on out of earnings, is I think there's a very strong chance that they do go ahead and use this opportunity on Monday and Tuesday to go ahead and clear those fails. Again, if they haven't already, they may have. So this it's a deadline. It's not a date of delivery. So I think there's a strong chance that if those fails haven't been cleared, they choose to do it then. And that could be the, let's say, not the catalyst, but the mechanism that drives some volatility on Monday and Tuesday. So again, a really good question here from Matt Hathaway. That is the engine, right? That is the system, at least in theory, right? As we understand it, that is the system which goes ahead and allows institutions that have swaps open to go ahead and use this liquidity system in order to selectively apply pressure and internalize volatility on the stock so that they can have favorable conditions for when those swaps do go ahead and expire. Hey, what's up, Poogie? Nice to see you, man. Trail Limo. Hello, Trail Limo. Nice to see you. I like your profile picture there. I always love the tinfoil cat. The tinfoil cat with the hat is very good. Let's see. How am I feeling about the stagnant IV with earnings just a few days away? I guess it is up in the 52-week low, but we usually see a much bigger run up on IV for earnings. You do make a good observation there, my friend. And we did see maybe a little bit, I guess, towards the end of the week. I would say that what we are seeing in general is significant IV compression because of where we are in this macro cycle. So let's bump back over to, let's see, our trading chart here. So let's pump out a little bit. So if we take a look, hopefully this will load. Load? Would you like to load? Well, we're going to let that, see if we can reload the page. It's not loading. Well, anyway, my point is, I think because of where we are, right, we are farther and farther out from a really major upward volatility catalyst, right? So over time, right, 2-3 years out from, say, the events of 2021, when we saw IV get up close to 600%, yeah, IV was dipping. When Roaring Kitty decided to come and return in 2024, right, IV was very, very low. In fact, it was as low as it was last November. Last November, I think, is actually the true low. That's our true low in terms of how low IV has gotten over the past 5 years. I mean, it is up a bit, but see, this is the thing, because IV has been low because of this kind of multi-year compression effect. I still think it's going to get crushed as a result of earnings. So that's the thing. I think there is quite a bit baked in here. If I just take a peek over sessions down here, to take a swim. But last time I checked, it's in the 50s, I think, for this particular, maybe for April OPEX. It was in the 50s. It is up though for these 2 weeks. It's in the 70s or 80s. So there is some earnings IV that's cooked in there. Now again, it is lower than what we've been used to, but that's a symptom. That's a symptom of where we are in this multi-year compression. Now, if we have another major event that sends GameStop parabolic, then we're going to have that. It's feasting time again, right? It's we get everything back. We get all this stuff back. We get the high IV conditions back. We get the volatility back. We get much bigger amplitude with respect to our cycles back, and that would be, that'd be something. But it is going to require something like that. Maybe it's the merger, right? Maybe instead of being Roaring Kitty, it's whatever the merger happens to be. That's going to be the event. Hard to say. But it would be likely a way to get something like that. Spider Claude, hello from California. Just got a question about the reason AMC runs when GME runs. It seems to always happen. Also, this is noisy, but what's a good amount of shares to have to do the share selling? Oh, you mean with the covered calls? Yeah. So I'll start with the second question first. There, Spider Claude. Thank you for your question. You need at least 100 to do a covered call. So blocks of 100 are required to go ahead and short call. In order to do so in a covered fashion, I would recommend you do. I mean, it's a perfect hedge. It's overkill as far as a hedge is usually concerned, but it's very good if you're just getting started for risk management. Again, if you're going to try to do multi-leg option stuff, I don't do too much of that. Sometimes I will. Sometimes I'll sell covered calls against like long calls if I happen to have them, if I need to leverage a portion of my position for some reason. But at least 100 shares is what you need in order to do that. And then just let the gains compound. You don't be slow at first, but once you get cruising, I mean, when I was poking around and doing stuff, I asked a few questions to a guy who, he was trading all throughout, basically, mostly SPY, but throughout the first 25 years of maybe late 90s to like 2020 or something like that. He started doing wheel strategy stuff, very basic wheel strategy stuff with just 5K. And in 25 years, he took that to $175,000. It wasn't his main portfolio. But he was able to do that. So it's quite the thing. The best thing to do is start start with low risk stuff. Just kind of get a feel of the instruments, and then you will see the power of compounding. It's quite the thing. Yeah, and then the question about AMC running with GME. Well, we don't know for certain why that happens. Some of it happens to do, let's say, with algorithms responding to online sentiment, right? So a big reason that stuff seemed to happen may have been simply because of algorithms reading sentiment. Another reason is that they are in a certain number of swap baskets, so they're swapped together, which means that counterparties hedge them together. And so what you see, Ultimator posted about this, right? When you see a lot of tickers having a very high, it's usually called a Pearson correlation rating, it is very likely that they are swapped together, or it's very likely they're being hedged together. So hedging on behalf of the really big institutions is pushing those around. When you have, let's say, low liquidity, that tends to really stand out. So in the case of GME and AMC, or KOSS, for example, KOSS is another one that runs a lot with GME. They're very likely swapped together in a single basket. It may be difficult. We don't even necessarily know which swaps they are. They're obscured, not necessarily. And counterparty institutions, right? They buy and they sell shares of those stocks together at the same time in order to hedge their exposure in a balanced way to that particular basket of swapped tickers. That's why stuff like that happens. Mr. Databugs, good question. What model? Where does the 2459 figure estimate come from? I assume you are talking about a max value on that 2350, 2450 for my estimates on Monday. That 2450 element is actually coming from our 53-week forward projection line. So 2450-ish is where we see the peak of that 53-week projection line here. So if we pump back over here. Yeah, so see this little dump up here? 24, it's showing right now, it's showing at like 24.75, but let's give it a nice round number, 24.50. Some you can look at on the options chain. Anything I'm specifically looking at during earnings? I'm looking for that sucker to dump. That's what I'm doing. I mean, like, I'm not bearish on GME overall, but I just I think that is what they're going to do with that double miss. So, I mean, I'm not looking for anything in particular. I'm just looking to see what happens. I'm strapped in. I'm ready for the ride. I'm ready to see what the company has in store for us. Ready to see what Wall Street has in store for us, and we're just going to try to. We're gonna try to see what we can do based on what they come up with. That's the game, right? So we'll have fun. Kurt says, beware of Robinhood phishing scams. Ooh, yes, do that. An alert on their website. A scammer will text you asking if you made a withdrawal, then send you an email with a link. If you click the link, it'll expose your info. Okay, good. Thank you, Kurt. Thank you for the heads up there. We really appreciate you, man. Hello. Oh, Hosta, what's up, man? I love that icon, as always. Nothing beats the eye of Providence. Total store count, Hoogie, yeah. Well, they closed at least 500 of those guys. Yeah, I want to do a live stream. I want to also do earnings live. If you guys want to hop on, we'll do it. Maybe we'll start an hour before market close, and we'll just we'll get the page ready. We'll do the refresh. We'll see what they're doing to us. Heading up to that point in the day, but that'll be a good time. I have to imagine this was back when I disconnected for a second. Green Cafe Narrow Wi-Fi. It's back. It's restored. We're good. Leader says strategy of identifying lows during swap events has to be retail's best strategy on GME trades. I think so. I think to be able to plan for lows and look for highs, that's the move. I do have a tendency sometimes to jump the gun, especially on the high. It's tough, right? Stuff's really moving. But you know the high when you see it, it just kind of really stands out to you. You're like, it's no cover calls. Since the predictive nature of the lows may fall on before or after a specific date, which you say there are some tells observation which indicate the fix is in. See, this is the thing, and this is what I think it's very important for understanding, right? What I think Roaring Kitty was trying to tell us, and it's that with the whole just up thing, it's like he doesn't know how high it's going to go. He doesn't have a price target. He has a timeline. And I think that's sort of like maybe to a certain extent what he was trying to communicate with the emojis too. It's like it's a timeline, right? It's a set amount of time. And you don't necessarily know. You could try to guess price. Maybe you'll get it. But the idea is like if you see volume start to taper off, you see a blow off top, it goes really right. Volatility's up, but volume's down and price is really high. Maybe, time to, the transition is coming. So it's like, you truthfully don't know what the run is going to look like until a certain amount of time has passed. And I think Richard said this too. It's usually like 11 days of high volume, high volatility in the season that you're expecting. And then with the lows, I think it's something like that too. Again, I jumped the gun a little bit, but I said, hey, once I see 23, if we dip below that, I'm going to start getting out of these calls. And I did, and I stuck to what I said, which is important, to do what you say. Do what you say you're gonna do. But truthfully, I guess I could have waited until the last second there with OPEX proper. That being said, right, I think there was that amount of time that was allocated for the low into an OPEX, and now we've got these 2 days allocated for a little bit of recovery into earnings. And then we've got 3-ish weeks allocated for a move down to a deep low. Maybe a little bit of play in there in the meantime, but looking for that low around 420. Yep. Can I share the logic behind selling 20s then closing, even though they're still in the money, instead of selling higher strikes that expire in the money? Well, sure, yeah. I mean, I sold them at 580. So, I didn't necessarily want to get a sign because I guess that would still work to a certain extent to get a sign. But I wanted to make sure I had my shares because I think now we're going to go up for 2 days here, and then I want to re-enter. And so why that? Well, I mean, there's more potential value to capture based off of that move. I think, hey, we're going to $21 or $21.50 or something like that, and I enter that $20 strike. If you're selling out of the money, you are mostly dealing with extrinsic. Now that's fine for stuff that's going to move quickly, right? Where stuff's going around, IV's going up and down. Time, a lot of time value, so charm, things like that. But you're comparatively getting less cash. So if you think you're going to go down, and if you think you're going to go all the way down, if you know the strike that's as far down as you're going to go, you'll get some extrinsic, but then you'll get a lot of intrinsic that's going to fall out of that contract. So essentially, what I said all the way back in the beginning of February when we had that move was like, I don't know how far we're down we're going to go. But I think we could go as low as 20. I didn't know how low, but I think we could go as low as 20. So I said, if we do, I want to have a perfect hedge between here, which I think this is absolutely the top. For this close to 26, this is absolutely the top. And do I think we're going to go below 20? No, I don't think we're going to go below 20. So, but I think we could go down that low. So I want to be with my shares. I want as much delta as I could possibly capture on this move between now and March OPEX. And I think, yeah, my profit on those contracts was about $2.80 per. So 280 per 100 shares. So that seemed to me the best way to be able to profit off the downside there, right? Again, it's a covered call. It can be rolled. It can be, any type of thing can happen there. Time is working with me, not against me, and I was pretty confident in calling the cycle. So maybe if I was less confident in calling the cycle, like when I first started, I didn't understand cycles at all. I was not as confident calling that stuff. So because I was working with a lot more uncertainty, I was usually trying to target. I was always trying to target out of the money stuff, at the money the most. That's what I was doing. But because I think we're going down, and I was right. That was a very good move. So I averaged close to $1.40, $1.35 after fees, something like that per month, right? My target there is to average, $1 per month. That's what I aim to do. $1 in premium per month per share. And so past 2 months. I mean, this month's not even up yet, but past 2 months was definitely able to hit that target, and I'm happy with the result. That's why I did that. Hathaway, how do you think about sizing the amount of covered calls as a percent of your total shares? Do you have a typical range you stay within? It depends on my confidence for the cycle, for the move. If we're moving into a high volatility up move, obviously I'm spreading those out, so I'll spread those out across a number of different weeks. I may leave, depending on where we are, how close we are, I think, to a particular volatility period, whether we're going to shoot up or something like that. I don't know. I just kind of play it by feel. It's very discretionary for me. When we're going into a down cycle, I'm all in, man. It's like if I think, we're going down now, 100%. Everything's covered. That's what I aim for. So I think, in going into next week, maybe I'll enter maybe a portion on Monday, maybe a portion on Tuesday. But my idea is I want to be fully covered going into. I would like to be hedged going into this. And hopefully I will bet correctly. We will see. Dr. Geppetto, hello. Very good name, sir. Can you review your what-if price strategy on the diagram? I'm not sure what the arrow indicates. I'm seeing that it's greater than value, but I'm not sure that's what you mean. We're also past March OPEX. Right. I drew that last week. So I will happily bring this up for you again. So this is my plan, right? This is my trading plan from last week here, right? So I'm keeping this up, right? I'm keeping this stuff up so you can see, you can evaluate how this goes. So, right, we can say this is, we draw some boxes or something. Can we do a check? Oh, we can do a star. Oh, it's a pretty star. Give myself a gold star. Give myself a gold star. Yeah. Did it. Yeah. So this indeed did happen. So here, this is what my positions were as of last week, right? This happened. We went to $23 by March OPEX, and on Thursday I closed all of this out for at $3 a contract for a profit of $280 per contract. So I did that. That happened. I executed on that. I did that. Those are the results. There we go. So next year, we've got, if price is at 23 pre-earnings, at least re-enter fully on $20 cover calls for April OPEX. Now, listen, because you always have to take into account what you think might happen. I could be wrong, right? They could not pump this stuff on Monday and Tuesday. I think they are, but they don't have to do that. They can do whatever they want to do. So I suppose what I said is if we're heading into earnings and we're at 22, I'm not sure I'm going to be want to head it. I'll want to head into that 100% covered. Maybe I'll do half my position. Maybe I'll do 35%. Maybe I'll mix some short-term stuff and some long-term stuff. Again, I think right, if we're going to 22, there's a good enough chance that maybe we shoot up to 25 after. We're going to cross that bridge when we come to it. And again, I'll do live stream on Tuesday. I'll let you know what I did. And then, it'll still be during market hours. So I don't know. Again, I'm not giving trade advice. I'm not telling you to do things, but I'll share my thoughts and my insights. If you care to take any of that and apply that actively, you'll have some time to do that. But that's what I'm looking for. If we're over 23, I'm going in full cover, and I'm going to stick to my April OPEX plan. That's the goal there. And then this next thing, if when price goes to 21, if I see at least $21 on the other side of earnings, whatever cash I have on the side, that's going directly into shares. That's going directly into shares. I'll leave those uncovered unless we get some mid-range volatility, and then I'll re-enter. I'll open up some more cover calls on those. And the idea is we're holding that. We're going to anticipate staying in that position until April OPEX proper. That's my aim there. After April OPEX, then I think we're going to get some upside volatility, so I'll necessarily be repositioning. And this is where I'm going to start selling out of the money weeklies until it looks apparent to me that we're looking at our downside, which I think is going to be June-ish. We have another really, really huge, utterly massive batch of swaps from Metro Bollins data that are dated in the 28th and the 29th. We've got about 50 million in notional that's visible to us. And then, we're 53 weeks out. We're closing in on 53 weeks out from, I think that's going to be exactly 52 weeks out, maybe a little bit less from the Bitcoin thing last year. So that's my overall road. Hopefully, Dr. Geppetto, that answers your question. Hey, what's up, Corey? Thank you, sir. Rockets away. Hey, Baba Wobbles, thank you. I'm glad you do. I feel a lot fresher. It was getting late for me, man. I wanted to be there for you guys on at market close. It's a cool time to do it, but continuing to move time zones away from the East Coast was just making it very difficult for me to be energized there after doing a whole day of work and trading and stuff like that, and then we're starting off at 10, 11 o'clock, and but here this is a little bit better time for me in the afternoon. I'm a little bit more pep in my step. I think stuff flows. I'm not dragging and hanging on every word, like that. So, but I appreciate you letting me know, man. Thank you very much. Postal says pre-earning stream will be very useful. We will do it. We will do it. I haven't decided if we're going to do 2:30 or 3. I think 3 might be enough time. Maybe I'll start a little bit early. Maybe I'll start at 2:30, and we can just hang out and take it slow. I'll take a look at some numbers. We'll see what's going on. I should be positioned by that time. So. Looks good. So price is 23. I think if it's at least 23, then I think there's a very strong case that I think that leans toward we move down to 21. I don't know about generally better, man. I would say you have to figure out what you are comfortable risking. I am comfortable with that, with targeting that strike, because I think that gives me the most amount of intrinsic without needing to go unnecessarily too deep into the money. I think for April OPEX, the liquidity on the 20s is actually pretty decent. It was tough for the Marches for a little while. This week wasn't too bad. April's, I think, are looking okay. Versus 22 and let expire. Yeah. So versus a 22. Well, the thing about a 22 is you might be leaving some stuff on the table. They're both. I think they're both fine trades. Yeah, I think. It depends on knowledge too. Like, you know, if you know the price is going to be really close to 22, if you know you're going to close on $22, like at $22 on OPEX, then selling the 22s is probably your best bet, because you'll have extra intrinsic, or you'll have extra extrinsic in there versus the 20s. So you don't have to worry about getting a fill either. But it's like, you will have an IV crush. I don't know, man. It's tough. It's tough to say. I think you gotta take a look at the pricing. You gotta take a look at the deal when it's staring you in the face. You gotta see what's on the table. You gotta look at the spreads that are there. Like, ideal circumstances are one thing. What's actually on the table for you is another thing. You know, I'll keep an eye on it, and if something really stands out to me, I'll go ahead and I'll post something about it maybe. But just gotta see what they're offering me, right? Gotta see the deal that they're putting in front of me. That's all I gotta say. I think either of those trades will work out in your favor. I mean, certainly if what I'm projecting happens, I don't know how much of a difference you're talking about. I don't think it's going to be very, very small. We have sales. Thanks for the explanation regarding my pricing strategy. I personally accumulate GME at or below my cost basis and look to historical resistance levels for highs. With regards to where swap days have been predicted, let's refer to them as Newton stars. I'm curious, what observations can we use that would tell us the swap has rolled? So you'll see like a violent low. That's my guess is one. Oh, if they rolled it versus closing it, where they opened a new swap, I think there's some reason to suspect that there may be a spike in Berkshire Hathaway Class A shares volume. That's one thing I haven't looked at, actually. So I did actually put this as a little doohickey here on my chart. That's price. Oh, I did have it here. Where'd it go? Oh, it's a whole ordeal to pull it up. Oh, no, it's right here. Let's see. Did volume spike? It did not. So maybe they rolled something. Maybe they didn't. But, right, if we take a look here, I think, strongly suspect that back during this last volatility event, it did. So on the 26th and the 2nd of February, from between the 20th to the 2nd, right, Berkshire Hathaway Volume A spiked up for some reason during this GME volatility. So I think there's a strong chance that some new swaps are entered there. Or when, I'm not sure. But I think there's a good chance. Appreciate the explanation on the diagram. Assuming you'll do the same at ACC you open this week for April OPEX and set a lower trigger that you'll exit those. Yeah, more or less. More or less. I mean, I'm just going to watch it, right? I'm just going to be hedged, and I'm going to enjoy being hedged until until April OPEX, and then we're going to see, right? Matt Hathaway. So I mean, I do look at the market probably every day. I do check. Yeah. So let me read the question now. In your article, that day-to-day concerns, right? I say something like day-to-day concerns yield at month plus, or am I constantly watching the price options data when market is open, or once you have your position, and do you watch it less frequently? I certainly do, right? If I don't think things are happening, so like right now, right? I think stuff is. I think stuff is going on, right? Like there's a lot of stuff for me to look at. There's, are we going to do this? We're going to do this. We're going to do this. We're going to do this. You'll notice between that volatility in January and February and now, like not really a whole heck of a lot of anything has happened. No news from the company. The price is fairly moved. We've been going sideways for a long time. And that was largely predictable. I was like, we're not really going to do anything until March OPEX. And we didn't, right? And we didn't. So like, yeah, I focused on other things, getting ready for the birth of my first child, doing stuff at, focusing on my research at work, stuff like that. Yeah, I mean, so I still watch stuff. I still look at data, but I'm less sort of combing through stuff, trying to, is this going to happen? Is this going to happen? There just wasn't stuff really too much to look for, like kind of like being like on the late side of December, maybe going into December OPEX. I was like, it's going to be a down OPEX, like earnings, some stuff going on. A lot of most of early January was kind of boring. Not too much to talk about. Like, if you're dealing about, trading ranges that are like 20, 30 cents up, 20, 30 cents down, and we don't have the volume necessary to make, say, like gamma or options that are really useful. Like, at that point, timing up weekly premiums is not super valuable. So like I'm looking multiple months so that the premiums really matter. And I'm waiting for stuff to tick off, or I'm waiting for, kind of souffle value to burn off or something like that. The next couple of months I think are going to be busy. Come June, I think then we get to hang out for 3 months again, and there's not that much to do. But then come September, I think we're going to be busy again. And come October, I think we're going to be busy again. November, questionable. Maybe later October, not so much. November, questionable. Early December, we're going to have earnings again. There's always year-end. January OPEX is something to think about. But then that mid-January, late January, well, that's going to be 2027. Maybe we get a little something. But, that's it. They're just kind of, it's different than, say, that 2024 into 2025, where, we had all of that volatility all the time. GEX was really important. Stuff was getting cleared out a lot. Swaps were getting cleared out a lot. Like, there was just something going on every week from 24 to 2025. Like, you cared about your Tuesdays and you cared about Thursday, and how does that set up for Friday? Every week. Now, not so much. But again, this season, this cycle, I think we do see, I think it's going to look a little bit more like that. So that's what I was kind of getting at there with that line in that article. Hey, Sharon, happy you made it to say hello. Good to see you. Sell calls, deep in the money, $20 strike. You're worried about getting shares assigned early. I'm not typically. I guess it's a possibility, but you got to get like deep in the money, I think, to get a sign like that. $20. I've not seen those get assigned early. If we really explode and like we go to 35 and I'm holding 20s, like, yeah, I might get assigned. But I don't want to be in that position. Hopefully not. Thanks for the heads up, dog. Swag, what's up, man? You're gonna end up with Big Richard amount of shares by my last 2027. Man, I'm always gonna be behind Richard, playing catch up to our boy there. He's ahead of Larry, dude. He's ahead of Larry. That's a ways for me to go. I've made great progress. I'll probably do another summer, like we can do another portfolio update like we did last year. I'll tell you my investment tracker, but we'll see how far this goes. Well, we get the cycle, we get the next cycle good. We get that January setup good, kind of that pew pew pew, just kind of hit all these marks and they play out like we think they're going to play out. We'll be looking pretty good. We'll be looking pretty nice come summertime. But Richard's, I know he sees at least things I see. So, a lot of us, worked out by talking to him. So, if I'm right, he's right. He's still gonna be ahead of me. He's gonna be like 2x Larry or whatever. So, but that'd be cool. That'd be cool if I could do some catch up. Dr. Teta, how do you think warrant date expiry in October OPEX warrants will impact these cycles coming? I don't know about October, but I will say that I think the fact that April OPEX is a warrant-tied option, it is a GME 1 option chain event, expiry, I should say. I think there's a strong chance that we see. I think that's sort of another data point that says we're going to be on the lower side heading into OPEX. I think that's another reason to expect. Right? So March, no, but March OPEX is usually low. May, I think, has a good chance to be up. June OPEX, I think, is going to be down. June OPEX again is another warrant tied date. I think after April OPEX, that's our biggest warrant tied options trade, and I think most of them are done then. And so it's just a question of what's going to happen in October. But in the short term, I do think April OPEX, because of the warrants, is going to end up being. Hey, thanks, Mr. Databucks. Yeah, Dad Life's going to be great. Due date. If you go by the, what is it called, HRV method, it's like the 15th to the 17th. If you go by the calendar method, it's at the 23rd or the 27th. We've had a couple of conflicting reports there, but it's second half of April. So hopefully I will have another investment, coming to fruition around April OPEX that I will be able to celebrate with you guys. Love it when I see institutions GME filings. I'm like, bro, I'm a bigger holder than big investments LLC. Yeah. Pretty soon, right? I mean, after so many donations to the Bank of GME, we'll be. I like seeing Ali Ahad Turker, for example, submitting those 13 Gs. Those are fun. He keeps increasing his position too. That'd be really awesome if he tries to roaring kitty the stock at some point. Maybe 5 years down the road, that'll be us, right? We'll be able to do something like that. Listen, guys, it is getting close to 6 o'clock, I do have to go pick my wife up from her painting class and complete this particular side quest. I hope this was helpful to you guys. I think this was a good checkpoint check-in. Obviously, it's a little mini celebration here, seeing the week play out in a way that we talked about last week. Obviously, very stoked being able to hit that mark trading wise. Yeah, so obviously love hearing from you guys. We will do an earnings stream. Maybe we'll hop in a little bit early at 2:30 p.m. on Tuesday. Then we'll do our normal stream also on Saturday as well to see then kind of the after effects of earnings there and how the week plays out. But thank you very much as always, guys. Great talking to you guys. Great having a chance to express my thoughts here and hear questions from you guys. It's always very helpful to make sure my thoughts are on the right track there. But wonderful to have you all aboard. Looking forward to seeing you guys on Tuesday. Please enjoy the rest of your week. Give your best, give my best to your families. And yeah, God bless as always. So we'll see you guys on Tuesday. Thanks very much, everybody.